It's Tuesday, the 26th of October, 2021. Welcome to the Fear and Greed Business Headlines, where we give you the top 5 business stories you need to know in just 5 minutes. I'm Michael Thompson, and good morning, Sean Aylmer.
Morning, Michael.
5 stories in 5 minutes. Let's get into it. Story number 1 is a little bit unusual. Telstra is going to spend $2.1 billion buying the Digicel telco businesses in the South Pacific. But the Australian government is going to pay for most of it.
Yes, the federal government, that's we taxpayers, will provide $1.3 billion plus another $330 million in dividends over 6 years for Telstra to buy Digicel, which includes telco networks across Papua New Guinea, Fiji, Nauru, Samoa, Tonga and Vanuatu. It was put up for sale at the beginning of the year and Canberra lent heavily on Telstra to have a look. Officially, it's about helping out the neighbours. In reality, it's more like warding off Beijing's influence in the region. The federal government has effectively given Telstra a gift. Now, good on Telstra and its shareholders. It gets an asset which should prove profitable over many years. But I'm just not sure as a taxpayer I should be funding a listed company to purchase an asset. The irony in the deal, of course, Michael, is that Australia is using a so-called private company to push its interests in the region, which sounds just like what we complained to Beijing about.
Yeah, it's a little bit strange, this one, isn't it?
Sure is.
All right, that's story number 1. On to story number 2. And Australia's sovereign wealth fund, which is called the Future Fund, delivered a 1.2% return during the third quarter and is now worth a casual $199 billion.
Yep, pretty much the biggest investor in the country. A more relevant number is its 10-year return because it does think about things in the long term. That's about 10.5%, which is well above its target of 6%. The fund was set up back in 2006 with more than $60 billion. It's added almost $140 billion in that time. Just something to note in this, it invests in local shares, but it invests just as much in share markets of developing nations like China. It invests twice that amount in developed economies, US, UK, Europe, those sorts of places. But its biggest chunk of money goes to private equity groups where it basically hands over the money and said make something from it.
All right, on to story number 3, and we seem to be talking about big deals and a bit of a deal frenzy happening almost on a daily basis. Surprise, surprise. Another one. Origin Energy this time has said it's done a deal to sell a 10% stake in Australia Pacific LNG for $2.12 billion to global energy investor EIG.
Yeah, what's really interesting about this one is it just shows how that market is in transition. It leaves Origin with a 27.5% of the Queensland-based joint venture, which is all about gas. The money will be used to pay down some debt, but also help Origin get more into renewables. That's what it wants to do. The buyer itself, EIG, is a big renewable player in wind and solar, but it wants to get into gas. This is the energy transition story. All these big guys know you need gas and renewables over the next few decades. We're going to hear this sort of story again and again in coming years.
Story number 4 this morning, Sean. You've got a little bit of a reputation now for telling us about unusual or perhaps slightly more obscure commodities and movements in different markets. Today, we're getting a lesson in palm and canola oil.
Well, I didn't realise that palm oil is actually the most consumed vegetable oil in the world. It's plentiful in supply and really easy to extract. However, Malaysia is having a terrible time of it. Malaysia is a really big producer. Its output has tumbled to a 5-year low, and this is just as economies are reopening. A lot of canola comes out of Canada. They've had a disastrous crop. So we have lots of demand, supply falling. Canola and palm oil prices, Michael, are at record levels. That's the lesson for the day.
Thank you very much, Sean. All right, story number 5. We've saved a good one for last. We love talking about property here, and this is an unusual property opportunity, to probably put it mildly. Tell me about it.
The Berrima Jail in the Southern Highlands of New South Wales is up for sale with an asking tag of $20 million. Now, it's nearly 200 years old. It's housed criminals from Eddie O'B to bent detective Roger Rogerson, corrupt Corrective Services Minister Rex Jackson and all sorts of people. There's a great story about it in The Australian today. It was built in the 1830s by convicts, includes 60 cells, a watchtower and 2 cottages, and it has ghosts. Lucretia Dunkley was hung there in 1843 alongside her lover Martin Beach for murdering her husband. The judge ordered that they both be buried standing up so they'd never rest in peace. Apparently, Michael, she's still there in spirit.
Sean, we go to some very strange places here on the Fear and Greed business headlines, but I'm glad we did. That's story number 5. Thank you very much, Sean.
Thanks, Michael. Have a great day.
That's the top 5 business stories in 5 minutes. It's Tuesday, the 26th of October, 2021. Remember to hit follow on the podcast. And if 5 minutes isn't quite enough, then find our longer podcast called Fear and Greed on your podcast platform, along with a whole stack of interviews. You can always find more information at fearandgreed.com.au, where you can also sign up for our free daily newsletter. I'm Michael Thompson, and that was the Fear and Greed business headlines. Have a great day.